It is not a consumer product at this point in time. So I don't think people should be panicking. Like, it's not going to take over the world. There's no audio. You know, it is sent video clips.
We both said it at the same time.
And one more thing that I think is super important for people to keep in mind when they see these clips is anytime a company puts out a clip, whether it's about a research project or a consumer product, they are doing what's called cherry picking. They are obviously showing you what looks the absolute best. And we can't know how many times they ran those prompts through their system to get what they're then showing you.
It's like when we all made our reel tapes, right? We took the best of like thousands of hours.
Speak for yourself.
Exactly.
Rachel Metz, Bloomberg News AI reporter. So great to check in with you again, joining us from San Francisco.
Let's go to Washington, D.C. now for a check on the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The cell phone outage that's affected mostly AT&T customers today has now been fixed. That's according to a company official. Now the FBI and the Department of Homeland Security will work to figure out what happened and if this could have been a cyber attack. Lawmakers may be on recess, but House staffers are still working to meet the March 1st deadline for the first spending bills that could avert a shutdown of the affected departments. We get more from Bloomberg's Irv Chapman.
Getting the work done on the House floor in a couple of days next week is a tall order, Tobin Marcus, political analyst for Wolf Research, said in a Bloomberg interview.
Likely that they actually get a bipartisan deal on an appropriations package in advance of the March 1st deadline seems quite low. I would not be that surprised to see a short-term shutdown of the four agencies for which appropriations lapse on March 1st. But Speaker Johnson, I think, has shown he really does not want the shutdown.
But whether the Speaker will allow another resolution to keep the government operating is unpredictable, Marcus said, as is whether he'll bring up the foreign aid bill for a vote. In Washington, Irv Chapman, Bloomberg Radio.
A black Texas student who's been suspended for his hairstyle has lost his lawsuit. Today's ruling came despite pleas from lawmakers who feel this is a blatant form of discrimination.
What kind of message do they send when they tell him that he should conform? Conform to what? To European standards?
That's Texas Representative Ron Reynolds, who wrote the newly signed Crown Act that bans discrimination over hairstyles. The judge ruled the school policy mentioned hair length, not hairstyle, so it did not run afoul of the new law. China is considering renewing its panda loans to zoos in the U.S. and Europe. The only ones in the U.S. right now are at the Atlanta Zoo. China's wildlife agency has reached an agreement with the San Diego Zoo in California on a new round of international cooperation. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are at records. NVIDIA is pushing higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It's all about NVIDIA today with the Dow currently up 458 points. S&Ps are higher by 108 and NASDAQ rises by 3%. The U.S. 10-year yield at 4.32%. Gold is down 2. Oil trading in the green. And Bitcoin is higher by 0.5%. Among the main 11 S&P sectors, leaders were tech and consumer discretionary. Only utilities were in the red. And leaders to the upside in the Dow, Salesforce and IBM, while Walgreens and Verizon led to the downside. After those earnings, NVIDIA gained as much as 16% to a new all-time high, while Rivian fell as much as 28% to an all-time low. Also in the tech space, Supermicro rose 36%. And in other news, Reddit filed for a U.S. IPO. Wrapping things up, some of the names putting after the bell tonight include Block and Carvana. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everybody. Just about 18, 19 minutes left in today's trading session, and we're just off our best levels of the session on the S&P and the Dow, or I should say, yeah, just a little bit off, but nonetheless, quite a rally underway. So let's get to it with our guest.
Yeah, we got Cole Smead here. He's the CEO and portfolio manager at Smead Capital Management. He's here in the Bloomberg Interactive Brokers studio. We should note the Smead Value Fund up 2.45% so far this year, although I should note, Carol, it's got an annual return of 14.78% over the last 5 years, so it's in the 99th percentile by Bloomberg.
All right, so how's the year feeling so far?
Well, like we were talking about just a second ago, a lot of things don't make sense today, okay? Like we were talking about, people have come into this year really looking at this as, great, rates are going to go down, so why not go long, call it risk assets in general. Right now, that's not playing out. Right, the Fed funds rates is not going to be backing off anytime soon, and the question is, will it back off at all? And if you look at the value of stocks, some of the more exciting stocks out there, I mean, this is kind of like everyone's taking fun risks. It's quite an exciting time in stocks, and yet at the same time, there's this cute little 5+% short-term rate that you can go collect rolling T-bills. That's riskless, and that is not a good thing for stocks.
Where do you think people are being careless when it comes to risk? Because I would argue that a lot of names, Palo Alto, for instance, got smacked down after a run up. So I would say that fundamentally investors are looking at their earnings, which were just coming off of the earnings season, and saying, okay, yeah, you delivered, or no, you didn't deliver, and we're gonna, take you down a little bit.
Yeah, to your point, we're getting to these expectations where they just wake up one day and then the expectations don't hold. Now, by the way, I'll use Palo Alto. I mean, they're still higher than they've been most of the last 5 years, I think if you look at the company. But what if we have that on some of our biggest stocks? And that was kind of like the NVIDIA. Is it going to be huge, or is it going to be terrible? And I think the options market were pricing an 11% move. It ended up being
very substantial.
Yeah,
right?
Very substantial move. I mean, we're talking about a move in stocks that would suck up large numbers of publicly traded companies in the S&P 500 in a one-day move.
Which is happening today.
And so I just point that out because there's a lot of risk out there. If you took the old tech, right, you took consumer discretionary, you pulled out the tech companies there, and communication services, you pulled out the tech companies there, and you put back the old tech together. This is way worse than the dot-com bubble. That was 28% of the S&P. This is 45.
But isn't this different?
I say, yeah, we're going to get in trouble for saying it's different.
This time is different, right?
The worst words,
right? The worst words you can ever utter.
But again,
But there's money here.
Correct.
There's real revenue and there's real profit.
Correct, which makes it exactly.
It's not just users. Like in the dot-com bubble,
no,
it was like, pets.com or whatever.
Weren't making money. Balance sheets didn't look good.
I totally agree.
It's careless money being thrown.
This is not that. You're right. That's not like 99. It's like 1972, where we took the greatest American businesses and as stupidly priced them as we ever did. So I'll give you a quick example. There were companies like Coke and Disney and Clorox, wonderful American businesses in there. But there were companies like Simplicity Patterns. Are you guys familiar with who they were?
My mom, we sewed growing up.
There we go. And that was the maker of sewing patterns in a knitting world. And that was a great business, high returns on capital, good balance sheet. And then you wake up 30 years later and it's not a business. And that's the problem with this, is we can't know the future. And in this environment, I would say we kind of are getting chronological snobbery, where we think we kind of know the future and where it's going, and that actually doesn't end up playing
So where
out.
do you think we're misplaced when it comes to, is it Apple, is it Google, is it Microsoft? Who is it in particular that you think we're misplacing our bets here, our investment bets, because you don't think they're going to be around 5, 10 years from now, 15 years from now?
Or just statistically speaking, only 1 out of the 7 are likely to be one of the biggest market caps in the world in a decade. Statistically speaking.
But being second or third is not so bad either.
Well, no, but even being in the top 10. Okay, now here's what I said. There's only been one company that was in the top 10 market caps globally ever that left it and then came back, which was Microsoft. It's the only one to ever do that. Every other example, you look at the Chinese companies in 2010, for example, they're all gone. If you look at oil stocks in 1980, they're all gone. If you look at the Japanese companies in 1990, they're all gone. And so I pointed out because there's one, let's say one. Now, the question is, do I want to play that game where I have to figure out which one of 7? Or I just don't.
But if
pull
you
those
ride
games.
it for 5 or 10 years, who cares? Because it is where the growth is. And I guess I would argue, I know I'm coming in a little bit hot here, but I guess I would argue that through social media, things work their way through the markets fairly quickly, I feel like nowadays.
Yeah, the only problem is everyone's a long-term investor when markets are high. And when markets are low, nobody wants to be an investor again. I mean, when do you run into, you get on this program and someone comes in and says, you know what, I'm a really short-term investor by nature. No one says that, but they all do that.
Yeah.
They all do that in the end. So I point out, because, most people think that, through what we have and the way we have looking at this and the way Wall Street's set up, we're gonna have better information will lead to better outcomes. But we've always had better information on Wall Street. And yet, it always produces outcomes that people never expected. And so I look at this difference, like there's a lot of smart people. Who is wise? And there's a big difference between who's smart and who's wise in these markets. So to your point, like we've taken way less risk, and we've made really good money not having to take those risks. So why stop now? But everyone else, they have to take those risks in, say, the passive index or these exciting, great American companies that we're talking about.
Okay, so you like home builders, you like oil. Occidental Petroleum's a big holding of yours.
Yeah.
The home builders are big holdings of yours.
Yeah.
What else is exciting to you?
Banking. Okay,
Yeah,
banking
you guys built up a position in regionals.
Yes, we bought M&T. We also bought Fifth Third, and we bought close to our backyard, Western Alliance, who was really in the heart of the bank run. If you guys remember the FT article on them. Buffett in the May shareholder meeting, he talked all about how if it wasn't for the Bank Holding Act of 1969,
Connection lost.
they would have continued to own a bank, and they would have never got into insurance. Well, why was Buffett saying that in May after we just had a run on banks? Because Warren cannot wholly consolidate banks, or otherwise he's subject to the Bank Holding Act. So he was telling everyone with a megaphone, banks are attractive. If you can buy attractive return streams over 10% return equity for below book, that's a pretty easy way to historically make money. And the good part is this has nothing to do with the future. It has everything to do with taking risk when others are scared. And that's not where people tend to like to make their money in stocks.
Are you anticipating, though, whether it's a Western Alliance or some of the other regionals, that there's going to be consolidation? And
there will be.
That's going to be that's going to be upside for you. Is that more of the play, though, right now?
Well, no, I would say we're going to lose 30% of the banks in America over the next decade. The same thing needs to happen in Europe, but they don't have a banking union like we do. So we're going to see those same tailwinds. What that's going to do is going to allow people to focus their capital and reduce costs, ultimately.
Hey, we have 30 seconds left. Just over the last year, what's the biggest trade you got wrong?
What's the biggest trade we got wrong? The fact that the stock market made really good money last year. In other words, we did too. We were shocked that we made good money.
At the end of last
But did you have
year.
too much cash?
No, we sit on 3% cash. So, we're long-only stock investors, but I just say it because this looks like 1972. We're going to end in misery. It's not going to end in a parade.
So when you say end in misery, are you saying 10% correction? Are you talking a bear market? What are you talking?
We probably got to clean this up with a 30 to 40% bear market. Among the best of the best American businesses like we had in 1972.
When does that happen?
Time only knows, but it's never at a good time.
This year?
Well, again, that's not our job to figure that out. We just avoid it. You just don't touch it. Don't play with it. Don't look at it.
Which is why you go into the names that you are.
Correct. It's kind of a wee willy keeler, hit it where they ain't.
All right. Cole Smead, CEO, Portfolio Manager at Smead Capital Management, joining us here in our Interactive Broker studio. The close is coming up next, just 10 minutes away.
The big stock story today, and of course the impact that it is having on the broader market. Right now we have got NVIDIA shares advancing. NVIDIA now up by just about 15%. The stock is rallying after delivering that eye-popping sales forecast, adding fresh momentum to a stock rally that already made it the world's most valuable chip maker. Among some of the other stories that we're following today, Rivian Automotive lower after the electric vehicle maker issued a disappointing production forecast and announced another round of job cuts. The maker of plug-in pickups, SUVs, and delivery vans expects to build just 57,000 vehicles this year, in line with last year's output and well short of analysts' average estimate for more than 80,000 units. The outlook underscores the challenges that Rivian is having with scaling production and stemming losses amid a slowdown in the battery-powered vehicle market. Shares of Rivian down 25.9% right now. Lucid down 17.4%. Tesla right now higher by 1.5%. Newmont, the world's top gold producer, will sell 6 mines and 2 projects and a set of divestitures aimed at generating $2 billion in cash. With the takeover of Newcrest Mining, Denver-based Newmont now operates 20 mines in 11 countries and does expect to produce 6.7 million ounces of gold annually by the year 2028. Some of the other stories we're following: AT&T, or Alphabet's Google, says it will pause the image generation of people for Gemini, a powerful artificial intelligence model, after criticism about how it was handling race. The move came after critics on X posted numerous examples from the model that appeared to feature historically inaccurate images in regards to the race of the subjects. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, just a few minutes away from the closing bell. Before we get to our TV colleagues, count you down, do some earnings as well, we do want to mention Reddit. We talked about it earlier, the social media platform filing publicly for a U.S. initial public offering. We got some hints of it certainly yesterday. I think the Wall Street Journal also gave us some tips there on that. Amy Orr is Bloomberg Equities Capital Markets reporter. What?
I was going to say, you know how I know there's an IPO?
Why?
Because Amy Orr is here. And when I see her, I know we're talking IPOs.
IPO, everybody.
It's been a long time since I was here.
I'm thinking around the time when ARM filed, you would hear a lot.
So funny.
And then, Klaviyo.
Klaviyo,
Yeah.
Instacart, Birkenstock.
But I haven't seen you in a
Birkenstock.
while, so welcome back.
I know. I've been kind of dormant for a
Where you
bit. But
been?
yeah, I'm ready to come back to action.
So tell us about Reddit, because as Carol mentioned the news, what are you watching?
So Reddit has been preparing for an IPO for 3 years, and finally it's here. And then technically it can start its roadshow in 2 weeks or so. And then that would be the beginning of how we will know more about where it's going to value itself. Because remember, in 2021, it actually did 2 series E and F, and then it was valued at $10 billion. But times have changed, and then now we're kind of thinking about the valuation is more closer to $5 billion. So
That's a haircut.
it is.
Wow. My understanding, too, is, let's talk about it. They did come out, 2023 net loss of $90.8 million, 2022 net loss of $158.6 million. So funny coming off of Cole Smead and talking about the internet boom, where we did have companies that everybody was throwing money at that weren't making money. Is this, though, I don't know, what are you hearing about this in terms of that this being a viable business? I mean, it's been around for a long time.
It's been around for a very long time, and I think to the company itself, it's actually at a good timing because it actually turned profitable in terms of EBITDA, adjusted EBITDA in the fourth quarter. So technically, it kind of narrows the losses in third quarter as well. So if you look at it, it doesn't really reflect in the filings because it only gives the 4-year number. But then if you look at the second half of last year, it was actually profitable, turning profitable and profitable in 4Q. So it's actually, this would be, investors would kind of like it. Yeah.
It's a good time. All right, good stuff. Amy Orr, we've got to run. Bloomberg Equities Capital Markets reporter. All right, folks, thank you so much. Amy, time to head over to our TV colleagues. That's because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, Katie Greifeld and Shonali Bassett counting you down to the closing bell. I'm here to help take us beyond the bell with a global simulcast. We're joined now by Carol Messer and Tim Stenivek, bringing together all of our audiences. And Carol, life is good. We're at a record high again.
Everything is awesome. I mean, think about the markets around the globe reacting to NVIDIA, and we certainly saw it here in the U.S. trade. When we look at individual groups, the semiconductors have to send thank you cards to NVIDIA because the group as a whole up about 5%. Almost every name in the stocks is showing some gains today, Tim.
Okay, it's tough to find folks who kind of poo-poo this, but we found one, Cole Smead.
Is that technical?
Yeah, it's a technical term. Cole Smead, we just spoke to him over at Smead Capital Management. They're value investors, so he's skeptical of the big tech names of NVIDIA, but he says, with moves like this, they see a 30 to 40% bear market on the horizon. He doesn't know when it's going to happen, but he doesn't think moves like this are healthy.
Yeah, the divergence is pretty incredible in the market today because you have so many people calling for this widening of breadth in the market, this idea of small cap, equal weight S&P. But does that hold up in a market that others believe a drawdown is pending?
Do you guys remember, like, at the end of last year when we did have this, like, gorgeous broadening out and the Russell 2000 went straight up and to the right? And I don't know where we are on that narrative, but it's right back to big tech, Carol.
Yeah, absolutely. Right. Just when everybody, don't you feel like you get, very strategists coming out, they're like, no, they've had their run. It's time to broaden out. And then here we are, all in again.
All in on these equity markets as well. When you take a look at the big benchmarks, we're almost 11 seconds away from the closing bell. Let's see how we finish up. And like we've been saying, it is a big, broad day, a lot of green on that screen. You take a look at the S&P 500 at 4 p.m. in New York. It is going to finish the day over 2% higher. We are well above 5,000 at this moment. Even more so if you take a look at the NASDAQ. Of course, the NASDAQ finishing almost 3% higher on the day. This was a day of big tech after those NVIDIA results. And I don't know, let's look at the Dow Jones just for fun. It also
give it some love. Amazon's going to be in it, right?
Yeah, that's true. We will definitely pay more attention to it then, but it also had a good day, finishing about 1.2% higher.
All right, quick check on the S&P 500. The split, folks, 366 names to the upside, 136 names actually losing ground today, and you had one unchanged, guys.
You had a lot of love in the sectors as well, Carol. You're looking at almost every major sector in the green on the day. Not surprising on a record day, I guess, but information technology, not shockingly, leading the way on those gainers, up more than 4% as a sector in the S&P 500. But led by that, followed by that, is consumer discretionary. So you do see some love broadening out just a little bit. Financials, industrials, healthcare, all got some love as well on a day, I might mention, with higher yields.
All right, guys, do have some earnings still. We're in earnings season still and crossing the Bloomberg booking. This stock, which closed at a record high in the regular session today, fourth quarter gross bookings coming in a little bit better than forecast, 31.7 billion. The forecast was for 31.3 billion. Fourth quarter revenue overall a little bit better than expected, 478 billion versus the estimate of 4.73. Right now the stock is unchanged. Fourth quarter adjusted EBITDA 1.46 billion, again a little higher than forecast. The estimate was 1.45 billion, excuse me. And fourth quarter room nights sold 231 million, a little light you might say, 231.46 million was the forecast. But again, this stock closed at a record high today, kind of the overall upward trend. But we're seeing maybe some little changes here in the aftermarket.
Glenn Fogel, the company's CEO, saying in a press release that he's confident in the long-term growth of leisure travel and the opportunities ahead for our company as we continue our work to deliver a better offering and experience for our supply partners and our travelers. I do want to point out something that he did say in the press release. He said that the year-over-year fourth quarter room nights grew 9% or 11% when excluding business associated with Israel, which was significantly impacted by the war. So certainly that having an effect on the company's numbers.
All right, booking shares now just down about 2.6% in the aftermarket. Let's go back to some of the individual gainers, if I may. There are a lot to choose from. How to go to NVIDIA in today's session. How could I not? Top, I believe, ultimately in the S&P 500, in also the NASDAQ 100. Actually, yeah, NVIDIA definitely top among the S&P 500. It was up 16%. So guys, pretty much finishing at its best levels of the session. You know the story. Head to Bloomberg.com if you missed it. But of course, we're just talking about an incredible amount of upside in terms of its market cap. I'm looking at a market cap now that's about 1.9 trillion, I believe, on this name. But it was all about what they'd said in terms of their outlook and the incredible growth, triple-digit revenue growth again for this company. So that lifted the overall chip space. So AMD popping up among the biggest gainers in the S&P 500, NASDAQ 100. If you take a look at AMD, also higher in today's session, just pulling it up here. And you saw that one just up about 10% in today's session. As we said, all the semiconductor names were higher today. One more, two, also popping among the biggest gainers in the NASDAQ 100 and S&P 500. Moderna reported fourth quarter revenue that beat analyst expectations by gaining COVID vaccine market share on its rival Pfizer. And you saw Moderna up more than 13%, guys.
All right, well, let's look at some of the decliners. I do want to start with AT&T. If you have AT&T service, perhaps you're not surprised by the news or the stock movement today, down 2.4%. The company did say its mobile network has been restored after a widespread hours-long outage that happened today. We should note the FBI and U.S. Department of Homeland Security began investigating why hundreds of thousands of wireless subscribers lost service. It wasn't just customers from, AT&T branded. It was those who use the wireless network also. So other carriers that actually piggyback on the AT&T network also suffering problems as well. Excuse me.
Suffering some problems with your voice there.
Yeah, I am. Rivian suffered some problems today. Did you guys see this? The company had its worst day on record since it went public back in 2021. Shares fell 25.5%. This after the company issued a disappointing production forecast and announced another round of job cuts. We covered this late yesterday. The company expects to build just 57,000 vehicles this year. The average analyst estimate was for more than 80,000 units. And finally, do you want to touch on shares of Etsy, among the worst performers in the S&P 500 today? Shares ended up falling 5. Is that an 8 or a 5, guys? That's an 8.4%.
8.44.
All right, I'm going to get my eyes checked.
Even through those glasses?
Yeah, I know. They're really thick and, still have problems. The e-commerce company's outlook pointed to a slow start for the fiscal year. Katie, what did yields do?
I am so excited to tell you about it. Let's take a look at the bond market, where all the action is. You take a look what yields did today. They rose a little bit being the key word there. You can see that on the 2-year yield, that up 4 basis points. Of course, we're getting a lot of Fed speak, really pushing back on the idea of sooner rather than later rate cuts, of course, saying that the fight against inflation, it's not yet over. But then you go down the list and it's pretty quiet there. You can call the 10-year Treasury yield just about unchanged. You did get a little bit of a bid at the long end. Of course, you look at 20-year yields down by 3 basis points, 2 basis points on the 30-year yield. Of course, we had a pretty ugly auction in the last couple of days, maybe seeing a bid come in after that or so.
Now, I want to bring us some more breaking news on Intuit as well here. We have more earnings coming out of Intuit. We have the adjusted EPS of $9.31, really coming in below what was expected from Wall Street here. The adjusted EPS expected for the year of $16.17 to $16.47, really falling in the lower end of what was estimated of $16.39. They kept their revenue target the same as well, still seeing up to $16.11 billion in revenue for the year. We are seeing shares now down more than 2.8% post-market as they had missed estimates.
Yeah, just looking at the press release real quickly, the company's CEO, Sasan Goodarzi, saying we had another strong quarter as consumers and small businesses continue to rely on Intuit's platform to power their prosperity. We have great momentum innovating across our products. We're well on our way to becoming the trusted assistant that our customers use to fuel their financial success. I feel like that's a pretty safe statement.
Shares unchanged in the after hours right now. The company sees adjusted earnings per share $9.31 to $9.38. Estimate was for $9.70, so that came in light. Sees revenue 10% to 11%, and it sees change in Credit Karma revenue -3 to 3%. Katie.
Yeah, some interesting earnings continuing to come in, of course. We do have Live Nation fourth quarter revenue beating estimates. Fourth quarter revenue came in at $5.84 billion. That is well above the estimate for $4.73 billion. You take a look at fourth quarter adjusted operating income coming in at $116.9 million. That is above the estimate as well. Of course, we're going to parse through these. You can see that the stock initially popped after hours. Now we are falling down 5%. We're going to dig into it. I would imagine, though, that it has to do with that outlook, but continue to follow that one as well.
Yeah, fairly big short position, about almost 9% of the float being shorted on this name, which is little changed on the year. But again, seeing Live Nation, guys, as you said, Katie, kicking around, but right now down about 5% here in the aftermarket. All right, that is a wrap. We're cross-platform, radio, TV, YouTube, Bloomberg Originals. Guys, have a good evening. We will see everybody again beyond the bell tomorrow, same time, same place.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening to and watching Bloomberg Business Week on radio, on YouTube, and on Bloomberg Originals. Carol Master along with Tim Stenevec. We want to get to the cover of the new issue of Bloomberg Business Week. It's available on newsstands now. It's online. It's, of course, always on the Bloomberg terminal. It's about the masters of hipster cringe that now have hardware and Wall Street cash.
Okay, those are not your words, not my words. Those are from Felix Gillette, media, entertainment, and telecom editor for Bloomberg Business Week.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
Zone of interest and past lives, they've kind of mastered the art of the small, $5 to $10 million budget movie, original voices, auteur-driven. And the problem with that is those movies don't make a ton of money. And so, they raised all this money, they have this high valuation, and the next step in their evolution is really to grow into, what you might call a mini major in Hollywood and try and, basically start making bigger movies, maybe not like, Marvel-sized movies, but in that range of, 30, 40, 50, 60, $70 million budget movies. And to do that, you have to take bigger risks. It's not as easy. You have to move into new genres, which they're really trying right now a lot of different things. I mean, it's kind of fascinating to see all the different intellectual property they're buying up. They're working with bigger stars. They have their first movie with The Rock is in development. They have a movie that they recently announced with Spike Lee and Denzel Washington that they're making with Apple. Yeah.
Does this feel, Felix, to you like that's their DNA, or that's a departure from what they're known for?
Well, when you ask them that, I mean, it's not what they're known for sure. They're known for much more smaller, sequel-proof movies. And when you ask them that, they basically said, well, we're staying with our director-focused model. We're working with the same filmmakers. We're just growing with them into bigger projects. I mean, I think a great test of this and whether or not they're going to have success will come in April when they have the movie Civil War. And that's by director Alex Garland. They've made movies with him in the past. Ex Machina was like a big cult hit for them, a great movie. But that was, again, a $10 million movie. Civil War, I think the budget's somewhere in the ballpark of $50 million. It's got action, it's got tanks, it's got explosions. And, that's going to be a big test. Can they make that kind of movie look legitimate? Do the special effects look good? Does the action ring true? Is it exciting? It's really the first time they've made an action movie.
Hey,
and it'll be interesting to see if audiences respond to it.
Felix, companies like this, I'm always like, who are the people behind it? Like, how did, tell us a little bit about kind of their origins and how it all came up on your radar. It's interesting. One of our YouTube producer, Elizabeth, she's like, I know this place, A24, I know them really well. Like, she's been tracking them, and I guess she made some, little films or something, something like that. But anyway, talk to us about them, yeah.
Well, what's fascinating about them is that, unlike a lot of independent media companies that kind of pop up on people's radar, there's no real frontman for the group. They don't really have like a big charismatic lead singer that's out there, like Jason Blum for Blumhouse, or, they've been very reticent in the press. They don't do a lot of interviews. And, in that absence, they've kind of created this mystery a little bit around the company. And they have a very strong and unique voice online. And it's this very kind of hipster, knowing voice. They have a lot of fans in that kind of 20 to 30-year-old demographic. They've done a really amazing job of like making A24 brand kind of speak for itself. And, for this piece, I kind of wanted to get behind the brand and really get to the people that run it. And as it turns out, they're New Yorkers, they're veterans of the indie film world. I think the one thing that really distinguishes them from a lot of the indie film companies we've seen rise and fall over years is that they do have very strong roots on Wall Street. So Daniel Katz, who's the CEO of the company, before he started A24, he did a stint at Guggenheim, and he was running their entertainment investment division. And you know, they have made a really good job. That they're kind of known for, you know, making good decisions, business decisions, not getting too out over their skis. And also, but just like not talking about their business very often, and letting this kind of mystery void and filling it with, you know, they have apparel that sells for a lot of money online. They kind of do these like sneaker drops for like A24 hats and A24 tote bags, which is
hey, it's
bizarre.
the world we live in, right?
Yeah, it's kind of crazy that people do that. You know, they have these auctions for things from their movies that, again, people pay absurd amounts of money to jump online and try and get, you know, I think the raccoon, the stuffed raccoon from everywhere.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Always love the stuff you do. Felix, thanks so much. Felix Gillette, Media, Entertainment, and Telecom Editor for Bloomberg Businessweek. This is the cover story of the new issue. Do want to mention Block on our way out. Stock is up 13% in the aftermarket. That's because of the outlook. It sees 2024 adjusted EBITDA of at least 2.63 million. Wait, that can't be right. Is that right?
It says, okay, I think there are some errors with the numbers
2.63 billion.
Okay.
It had seen 2.4 billion. So we just want to get that right. Stock is soaring.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Among the companies reporting earnings after the close of trading, we heard from Booking Holdings. The stock now down 4% after the war in Israel contributed to lower room reservations during the holiday season. Intuit out with guidance that missed the average analyst estimate. After hours, Intuit shares down now by about 1.8%. Records for the Dow Jones Industrial Average and the S&P 500 Index. S&P closing at 5,087, up today by 2.1%. Dow, first close ever above 39,000, up 456 points today, up 1.2%. The Dow now at 39,069. NASDAQ advanced 460 points, up today by 3%. The stock rally powered ahead as NVIDIA's bullish outlook rekindled the AI mania. Also this morning, we got data showing the U.S. economy is still going strong. NVIDIA today up 16.4%. So the S&P up 105, up 2.1%. 10-year yield 4.32% with a 2-year 4.70%. Spot gold down by $1 the ounce to 2024, less than 0.1%. West Texas Intermediate crude up 0.7%, 78.43 for a barrel of WTI. Again, recapping a record on the S&P, higher today by 105 points, up 2.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. So, Carol, Dirk Van de Put, the chairman and CEO of Mondelez, told the Financial Times, this is in an article today, that investors did not, quote, morally care whether or not companies operate in Russia.
That's pretty wild.
Yeah.
I actually heard this morning, too.
So he also said the shareholders had not pressured Mondelez to leave Russia despite its invasion of Ukraine. So in other words, even though much of the world has condemned Russia's military action, the company says investors are fine with it, and Mondelez doing business there.
Interesting. We talk about this all the time, right? What moves a company's stock? It's the top line and bottom line. Ultimately, here we are coming off of earnings season. Do we need to say anything more? And, you know, how that's going to look in the future. That is what matters in terms of the outlook. It's what moves stocks. We talk about it all the time. Doing what some people could consider the, quote, right thing, not a way to measure that when it comes to those quarterly reports. It's different.
Yeah, so really interested to hear what Allison Taylor has to say about all this. She's professor of ethics at NYU at the Stern School of Business. She's also the executive director at Ethical Systems. She's got a new book out. It's called Higher Ground, How Businesses Can Do the Right Thing in a Turbulent World. Professor Taylor joins us from Woodstock, New York. Professor Taylor, good to have you with us. How are you?
I'm doing very well, thanks. So nice to be here.
Well, thanks for joining us. What do you make of what we heard from the CEO of Mondelez earlier today that, you know, the company hasn't felt pressure from its shareholders to actually stop doing business in Russia?
Well, I mean, I think we tend to have had a pretty simplistic discussion in the press about whether companies are in or out. I think the picture beneath the surface is a lot more complicated than that. Companies have, for example, been criticized for selling their assets to local nationals. And so if we're thinking about human rights, a company like Mondelez arguably, right, has some argument for being in Russia and continuing to sell essentials, at least, to Russian consumers. It's not like it's a democracy. And I think the reality is that this picture is much more complicated and nuanced than people suggest. I believe that companies like Unilever and Nestle are actually also still operating in Russia.
But what do you make of the argument? Take China, for example. The argument was always better to be, if you're a multinational, be there on the ground, help be an agent for change overall. And yet, here we are. I feel like the beginning of my career was all about the opening of China specifically, and every company who was a global multinational wanted to have boots on the ground, if you would, or have some kind of collaboration so that they could tap that domestic market. Here we are later, and it is a bit of a tortured relationship, it feels like. And I feel like everybody is, still want to be in China, but I'm also working on, diversifying my global supply chains and maybe reducing some of that risk exposure. So I do wonder, I don't know. I don't know what the answer is about what role companies can play or that they want to play ultimately in doing the right thing in a world that, as you rightly write, is very turbulent and getting more so, it feels like, every day.
Yeah, so I think, back in the 90s, early 2000s, we used to tell ourselves this very nice story that we should have foreign direct investment going into authoritarian countries, and that would lead to economic liberalization, and then that would lead to democracy, and there'd all be this sunny story to progress and the end of history. It has not really worked out that way. We're in a far more multipolar, geopolitically fraught world. And I think the reality is that many companies, especially in consumer-led businesses, are getting trapped between the kind of cellar of Western consumers' expectations that they tackle human rights issues, they tackle climate change, et cetera, with the reality that they still need to make money for their shareholders. And then that also, if companies pull out of countries like China, there's been a big flood out of Myanmar recently, that doesn't necessarily benefit human rights on the ground. So we've just had a ban on products from Xinjiang on human rights grounds. That's very complicated. Most of our solar panels can't currently come from that region. So I think there's like this nexus of really messy trade-offs between environmental and social issues and between the expectations of consumers and governments all over the world. There's a crazy expectation, I think, from everybody that companies are perfectly consistent at all times and not hypocritical, but we haven't really come to a consensus on whether we want Western businesses to pull out of all these problematic places, and then what the second order consequences of that would even be. So I think the conversation is just really messy and really fraught, and companies trying to chart a nuanced path like Mondelez sometimes seem to be getting the most flack of all.
How do you define what is right in business? And the reason I ask that is because I think a lot of us know fundamentally what's right and wrong, but there are disagreements that happen in the business world that aren't so clear-cut. And you opened by talking about Starbucks and the fight for unionization that some of the employees at stores, the baristas at stores around the country, are doing right now. And you make the point that even some white-collar workers in the Seattle headquarters threw their support behind these baristas. But there's certainly a way that management thinks what's right in this situation. That's different than what the baristas who are fighting to unionize feel is right. So how do you define right?
Yeah, well, I mean, one of the problems is we don't agree on this topic at all as a society, and we don't even have the right language to talk about it anymore. Terms like ethics and ESG and purpose kick around, but I think we've completely lost sight of this question. And I find the Starbucks example so fascinating because Starbucks is by most measures considered an ESG and sustainability leader. It ticks all the boxes. Even how it treats its employees is up there in various credible ratings and rankings with the best companies in its business. And yet this unionization issue has really brought it a lot of flack and really made it be regarded in a different way. There's also been this tendency to treat these issues as very, very partisan. It's all about woke business, or it's all about people trying to get their political agendas completed, if you read a lot of the rhetoric out there. I would tend to argue, however, that I don't think at the end of the day it is that many questions are actually that partisan. So there have been examples recently. We can think of the Norfolk Southern train derailment. Right. We can think of there was a settlement with Hertz where Hertz was having its customers arrested and accusing them of stealing cars. Or we can think of Amazon workers being forced to work next to a dead body all day. And I would just ask how partisan those issues really are.
Yeah, good point.
I think at the end of the day, we need business to clean up its own mess and treat people with dignity and respect before starting to go out there and yodel about saving the world.
Totally agree. And I do think there is a point where if you, there's all these studies that, rate workplaces, and I do think employees are pretty picky when they can be, that if they're in a not a great work environment, they're going to leave. Having said that, one of the things that, Allison, Tim and I think always grapple that if you're a publicly held company, every quarter you are measured by financial metrics. Ultimately, I'm not saying that there might be some views based on what management does or if they break the laws and regulators are going to come down. But you know what I mean, that I feel like you have a line in your book, a leadership obsession with hitting goals sales goals generally tends to trump compliance processes. And you were talking about Goldman Sachs here and also coming off of Wells Fargo. But how is that balance really playing itself out among corporations? Is it really a true debate?
I don't think it's still a debate. You know, we saw all this rhetoric from Larry Fink from the Business Roundtable. You know, we're moving to this new era of stakeholder capitalism. There was the golden era of this, you know, peak Larry Fink in, right before the pandemic. I think it would be one thing if we'd all agreed we were moving in that direction, but as you're rightly pointing out, those short-term shareholder value pressures are just as pressing as they ever were. So now it's really more of an everything everywhere all at once problem, where I think leaders are really reaping the harvest of this rhetoric that they were putting out there in the late 2010s. They're really struggling to balance all these different voices, and certainly employee leaks, employees speaking up, reputational pressures, ethical missteps can tank your stock. They can have a very, very serious negative financial effect. I think one of the things that makes this so tricky is different businesses can be treated in very different ways on social media and in the public domain for the same conduct. So we tend to talk about reputational risk as if it is some of predictable formula. It's absolutely not. It can feel like it's coming out of nowhere. And so I think that's part of why it's become so difficult to run a business.
Professor Taylor, we got to leave it there. Allison Taylor's got a new book out, Higher Ground, How Business Can Do the Right Thing in a Turbulent World, joining us from New York.
All right, everybody, let's get back to World and National News. Off to D.C. we go, and Nancy Lyons. Hey, Nance.
Hey, Carol, thanks. AT&T is apologizing for a massive cell phone outage that started this morning and hit customers all across the country. The company says almost all of its wireless service is now back. Various government agencies, though, are now looking into the cause and if it could have been a cyber attack. Outages were reported in New York, Houston, Atlanta, Miami, Chicago, and Dallas. Tomorrow, the U.S. will be announcing new sanctions against Russian President Vladimir Putin for the death of activist Alexei Navalny. Today, President Biden said he met with some of Navalny's family.
This morning, I had the honor of meeting with Alexei Navalny's wife and daughter. As to state the obvious, he was a man of incredible courage. And it's amazing how his wife and daughter are emulating that.
The meeting took place today in San Francisco, where Biden has been holding fundraisers. Vladimir Putin is showing off his military hardware today. He took a 30-minute flight in one of Russia's newest strategic bombers, which is capable of carrying nuclear warheads. The state-run TASS news agency quoted Putin as saying that after the flight, they've received, quote, new technology and excellent equipment. The scheduled landing of the lunar spacecraft has been pushed back to 6:24 Wall Street time. Intuitive Machines that built the lander is striving to become the first private business to successfully pull off a lunar landing. The company's chief technology officer, Tim Crane, talked about the mission, marking an important first step in exploring our vast universe.
The moon has 1/6 the gravity of Earth and no atmosphere. So it's a much easier place to launch deeper into the solar system. It really is the launching pad into human exploration out into deep space.
Today's landing will be carried live here on Bloomberg. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Bloomberg World Headquarters, I'm Charlie Pellet. 440 on Wall Street. What a day on Wall Street. Records on the S&P, a record for the Dow Jones Industrial Average. And after hours, we're keeping an eye on Carvana shares. The stock now surging by 16.4%. Carvana topped Wall Street's profit expectations in the final months of 2023. It also said it expects even better earnings this quarter as the used car retailer defies the challenges of high interest rates and inflation. Also out today after the close of trading, Booking Holdings, it's slipping in late trading after the war in Israel contributed to lower home reservations during the holiday season, Booking down 4.1%. S&P today up 105 to a record higher by 2.1%, closing at 5,087. Dow Jones Industrial Average today also at a record, first close ever above 39,000, 39,069, up 456 points up today by 1.2%. The Nasdaq Composite Index up 460, a gain today of 3% on the Nasdaq Composite Index. So big gains for stocks today after NVIDIA earnings. NVIDIA up 16.4% today. Cole Smead is portfolio manager at Smead Capital Management. And right here on Bloomberg Business Week, he told us he is concerned about the tech rally.
There's a lot of risk out there. If you took the old tech, right, you took consumer discretionary, you pulled out the tech companies there, and communication services, you pulled out the tech companies there, and you put back the old tech together. This is way worse than the dot-com bubble. That was 28% of the S&P. This is 45.
And again today, the NASDAQ 100 index up by 3%. 10-year, 4.32%. The 2-year, 4.71%. Spot gold lower today, little change, down less than 0.1% now at $2,024 the ounce, while crude oil, West Texas Intermediate, up 0.6%, 78.38 a barrel. So again, recapping, Carvana surging 16% after hours. NVIDIA up today by 16.4%. I'm Charlie Pellet. Lots going on. That is a Bloomberg Business Flash.
And Charlie breaking down Carvana soaring in the aftermarket. Still, Tim, though, down 85% from August 10th of 2021 when we saw it hit a peak.
Yeah, this is a company that in 2022, Carol, was down 97%. I mean, there were a lot of people who left it for dead.
Yeah, and then up over 1,000% last year. So
yeah,
they've
but
been
still
doing
not back even close.
restructuring debt, cutting costs. Right, exactly. So just a little perspective, but interesting name. All right, we should switch gears a little.
Let's switch gears. I know you saw this last month because you talked about it. The Biden administration is going to allow Florida to import cheaper prescription drugs from Canada, giving the green light to a plan that could spur other states to follow suit.
Yeah, and they already are, I think, lining up to do so. The FDA decision is the first time the agency has authorized a state to import drugs in bulk from a foreign country, according to an agency spokesperson. It's also the latest turn in a back and forth between states and the federal government over importing cheaper drugs.
Well, Dr. Mariana Sokal is associate scientist in the Department of Health Policy and Management at the Johns Hopkins Bloomberg School of Public Health. She joins us from Brazil this afternoon. Dr. Sokal, good to have you with us. I should note the Johns Hopkins Bloomberg School of Public Health, it is supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. So is that it? Is it so easy now? Florida can import drugs from Canada. Is that it?
Well, it's an important step. It's a new program. It's the very first time we've had that initiative approved in the United States. And it will definitely bring some change that we're excited to see how it will go.
Well, I want to get to the core of why this is an issue. It's because drugs in the U.S., I don't need to tell anyone who's listening who lives in the U.S., that drugs in the U.S. are so expensive. Our healthcare system...
Unbelievable.
Some people would argue, Carol, that
Yes.
it's broken.
Yes.
And that it's way too expensive for a lot of people, given that how expensive insurance premiums are and how much companies spend for employer-sponsored healthcare.
Yeah.
Why is it so much cheaper to get drugs from Canada, Dr. Sokal?
Well, you guys are absolutely right. My research showed that on average, we're paying 3 to 4 times higher prices than other countries like Canada. And the surprise here is that it's not only for new drugs that, are new launches. We pay the most for drugs that have been in the U.S. market for a long period of time. So other countries do have mechanisms to bring prices down over time. And in our country, there are some transactions and negotiations going on, but they typically do not favor directly the consumer. Typically, they happen at the health plan level. And the health plans decide and determine how much people need to pay to get their drugs. So on the one hand, we don't have strong pricing mechanisms to bring prices down over time, and these prices are very non-transparent. And in the other hand, unlike other countries, we also have typically a higher requirement. We allow our plans to charge higher prices from people. So it's very usual to see, especially for a high-cost drug, plans require a person to pay 20% of the drug's cost when they get to the pharmacy counter.
Dr. Soka, I feel like we've been talking about this for years. I think go back to the Clinton administration, right, when they first tried to put some kind of healthcare plan through. So this idea of the Americans paying higher drug costs, right, not a new thing. My understanding, though, and I think what caught our attention is like, ooh, is this going to be an opportunity for individual citizens of the United States to pay cheaper drugs? My understanding, I'm looking at a column that was put out by the Bloomberg editorial board about mid-January. For more than 2 decades, U.S. pharmacists and wholesalers have been allowed to import medications from certain countries, including Canada, provided they're safe and deliver savings to consumers. The Trump administration, certainly when he was in the White House, Donald Trump, helping to move some of this along. Having said that, don't ultimately pharmaceutical companies kind of control supply, and can they not potentially hold back what they sell to Canadian distributors, that will ultimately kind of make it difficult maybe for American buyers, state buyers, to tap into that? I mean, it's still not going to be so easy, right?
Well, let's just mention, that the U.S. market is so many levels of magnitude bigger than the Canadian pharmaceutical market. I mean, we are over 20 times larger market. So, if it wasn't just a state program, if we were to depend on Canada for our drugs, of course, that would place an incredible strain on the Canada drug supply. And not to mention that Canada also suffers drug shortages and all sorts of different supply problems as much as we do here. So there is an incredible risk to the supply in Canada as well if, these programs were to be more widespread and we were to depend more on the Canada supply in order to provide drugs for our people.
How do you see it from your research? Is it a case of we've really got to get to the core of why is it so much more expensive here in the United States? Like there's negotiating that goes on, right, for Medicare and so on and so forth. But why is it ultimately so expensive? Is it because individuals can sue companies? I try to understand why is it so much more expensive for medications and pharmaceuticals here in the U.S. versus certainly in Canada and elsewhere around the world?
Well, first of all, we have what is called a market-based pricing system. So companies, they can charge whatever the market can bear. So that's the first thing. We don't have specific structures, mechanisms that force prices to go down over time. That's one thing. So we have a free market. The other problem is that the intermediaries that typically are in charge of negotiating these prices, they do profit from the difference in between whatever price is announced and the final price that they are able to obtain through price concessions such as rebates and discounts. So these intermediaries that are very unique to the US, they're called the pharmacy benefit managers. They don't exist anywhere else in the world. They are a US entity. These entities, they can profit off of the rebates and discounts that they negotiate. So this represents an incentive for pharmaceutical manufacturers to continue increasing pricing over time, even if they haven't made any changes to their drug, just in order for these intermediaries to also make a profit and to keep their drugs in the formulary and being covered.
We only have 20 seconds left, but what's the solution that you would prescribe here?
Well, transparency is important. I'm eager to see the prices that the Medicare drug price negotiation will announce. That will bring transparency in the market, and ultimately that will also help consumers. So the Florida importation prices that we will know will be helpful. The Medicare negotiation prices that we will know will be helpful. So all these added elements of transparency will bring, a lot of benefit to the U.S. market.
Right, the Inflation Reduction Act empowered Medicare to negotiate I think an initial list of 10 older, widely used drugs in terms of pricing. So we'll be watching all of that. Dr. Mariana Sokal, Associate Scientist in the Department of Health Policy and Management at the Johns Hopkins Bloomberg School of Public Health. Thank you so much. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Moderna shares surged 13.5% today after reporting fourth quarter revenue that beat analyst expectations by gaining COVID vaccine market share on its rival Pfizer. Moderna's CEO Stéphane Bancel spoke with Bloomberg this morning about the company's outlook.
There is much more to Moderna than COVID. So on the one hand, they want to understand the COVID sales and how we're going to grow the COVID sales and layer on that RSV sales and then flu sales. Because the respiratory franchise is going to be an anchor to Moderna forever, because those viruses are not leaving the planet. But of course, we are very excited about the future. I mean, we have a 9 product in late-stage pipeline, including cancer, but also, rare genetic disease. And so it's a very exciting time for Moderna because they're getting the existing products, but they are looking forward to the sales growth delivered by the pipeline.
And again, Moderna shares up today by 13.5%. Rival Pfizer had a down day, falling by 0.4%. After hours, keeping an eye on Carvana shares. That stock driving higher now by 20%. It topped Wall Street's profit expectations in the final months of last year. And it also said it does expect even better earnings this quarter as the used car retailer defies the challenges of high rates and inflation. Again, after hours, Carvana up by 20.6%. We're also keeping an eye on Booking Holdings shares. That stock slipping in late trading after the war in Israel contributed to lower room reservations during the holiday season. Booking shares after hours down now by 5.2%. Intuit out with guidance that did miss the average analyst estimate. After hours, we've got Intuit shares also trading lower, down by 2%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, getting ready to wrap up here on the Thursday edition of Bloomberg Business Week. Carol Messer.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I want it to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Well,
15% chance.
Right,
Correct.
15% probability of that
50%
happening.
today, but
Right.
look-
Cole Smead said the same thing, though.
Cole Smead did. Well, Cole Smead's asking for the market to come down, what, 30
30 to
40%?
40%, yeah.
I don't know.
I don't
It
know
feels to me like there's still, an abundance of liquidity. And there was little movement in the bond market
That's
today.
a great question.
Yeah.
You wonder, where did the money come out of? That was a lot of money moving
Well, there was
into
been
the
a lot of
equity
money on the
trade.
sidelines. We know that. I mean, I think the money market, I don't remember the last reading on money
I
market.
thought it was still very high.
Yeah,
and I
very
thought money
high.
was still
So-
going
It's about
into
$6
it.
trillion.
Yeah.
Yeah.
Well,
Th-
thanks
there-
for that.
yeah.
Yeah. It's been at 6 trillion for a while.
Wow.
There's dry powder.
You know, as soon
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.